Combine all of that, ETF corporate treasuries, regulatory clarity, and you have the infrastructure that previous Bitcoin cycles never had. Spot Bitcoin ETFs launched in January 2024. For the first time in history, a pension fund manager in Ohio can allocate to Bitcoin through the same vehicle that they use to buy the S&P 500. By Q1 2026, institutional investors accounted for over 60% of all spot Bitcoin ETF inflows. That is not the retail-driven leverage casino of 2021. This is fiduciary capital with mandates. And that capital behaves completely differently. When Bitcoin dropped 50% from $126,000 to $60,000 between October 2025 and February 2026, you would have expected a stampede. Instead, ETF outflows over that entire period totaled $6.4 billion, less than 7% of total assets under management. April 2026 saw $2.4 billion of net inflows, 6 consecutive weeks of net positive flows through May. BlackRock's IBIT alone took in $8 billion during the worst of the drawdown. Larry Fink called it accumulation on the dip. Strategy, formerly MicroStrategy, holds over 500,000 Bitcoin on its balance sheet. But it's not just Saylor anymore. Approximately 172 publicly traded companies now hold more than 1 million Bitcoin combined. That's over 5% of the entire circulating supply locked on corporate balance sheets. Metaplanet in Japan is targeting 100,000 Bitcoin by the end of this year. 21 Capital, backed by Cantor Fitzgerald, holds over 40,000 coins. The Saylor playbook has been exported globally. The Genius Act was signed into law on July 18, 2025. It's the first comprehensive federal framework for stablecoin issuers. It established one-to-one reserve requirements, AML compliance, and bankruptcy protections for stablecoin holders. The Clarity Act, which classifies Bitcoin explicitly as a digital commodity under CFTC jurisdiction, is moving through the Senate Banking Committee right now. The White House is targeting a presidential signature by July 4th. Polymarket has the odds of Clarity Act passage in 2026 around 73%. Combine all of that, ETF corporate treasuries, regulatory clarity, and you have the infrastructure that previous Bitcoin cycles never had. Every previous cycle was retail-led. This one is institution-led. That's the difference.